What's going on? Welcome back to Trending Stocks. Today I want to talk to you about PayPal. I want to go over some of the current data points, break it down on what's really driving it together today, and go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. I always greatly appreciate that. And with that said, let's get right to it. So right now it is up 1.69%. A fair amount of volume. So within the first about 2.5 or 3 hours of the trading day, 6.1 million shares been traded. 18 is the average. And so far, PayPal has actually been doing fairly well. And today I did buy a little bit more, and I think it was only about 10 shares, so nothing crazy. But I really do like PayPal, and like I said in my video yesterday, based on the technicals, it is due for a nice breakout. Obviously dependent on CPI, so I'm going to play this video near the tail end because this analyst does talk on kind of the recent data, CPI, and rate cuts, which of course will definitely affect the broader market and PayPal. So highly suggest and kind of staying tuned for that. As far as today, no SEC filings, no press releases. Last SEC filing was done on March the 7th, so it's been relatively quiet coming from PayPal. And as far as data points, let's talk all about that. So starting off with shorts, but as I've said in the past, PayPal is not a short squeeze play. Just bringing this up as more of a benchmark, it's good to analyze exactly what they are doing. So right now they're increasing about 92.3 thousand shares, 1.98% of the free float is being shorted, and 21.21 million shares overall are being shorted, and cost of borrow average is 0.35%. So of course it's not a squeeze play, but by them increasing on a green day, it's kind of saying that they don't feel as justified. And so like I kind of pointed out right over here, a lot of growth stocks are pulling back. In my opinion, one of the main driving factors today is A, the technicals, and B, value plays. So especially leading into CPI, last minute jitters are getting out of the market right now, but value or deep discounted stocks are kind of holding its gains. And so obviously within that criteria, PayPal could be seen as, in my opinion. But looking at options activity, $8.52 million in calls being purchased versus 3.43 million in puts. Sentiment wise, 54% of all the options being done today are optimistic. There has been a lot of long call options being generated, roughly about 1 year out, so about 312 days, and 140, 145, and $100 strike prices are very, very active with very high open interest. So of course that might mean something big potentially is coming, or again, just a lot of high expectations based on PayPal. Looking at the call options that are being purchased for this upcoming week, it looks like there's a consensus for it to be roughly between that $63 to $64 range. Again, that does match the Elliott wave technicals that I did point to yesterday. And looking right here, these are some of the transactions that have occurred on the secondary market above $100,000. So big money is getting into PayPal today, and even it is very active through the dark pool. So these are some of the transactions similarly above $100,000 on the dark pool. Dark pool, more common than not, is used by shorting and just a lot of bigger institutions that obviously does not really affect the stock price itself. So it's kind of done behind the scenes, but still it is good to kind of analyze this information and just be aware of what is happening behind the scenes. But quickly moving on, just to give you a quick overview. So these are some of the latest ratings, no new ones other than Morgan Stanley. James, who does have a 65% success rating, gave a $62 price target. And for their upcoming earnings, I know it might be a little bit more premature to start thinking about that, but I have been watching just to see if there's been any changes, and not really so much to talk on. So earnings per share did drop slightly, so $1.21 to $1.20. And then for revenue, not really much of a change, so 7.51 billion to 7.51 billion, still 32 estimates. So nothing really crazy, like I said. So I have been analyzing and kind of watching all of that, so I'll give you guys constant updates on that. But aside from all of that fun jazz, let's go over some of the technicals. So right now with it at $60 exactly, it is between this pivot and this R1. So $59.24 is a very strong support, and $60.37 will be that next strong resistance. Didn't really have enough to actually test that R1 today, but who knows, it might actually happen later today or potentially tomorrow as a result of CPI. But again, we'll just have to wait and see. Give yourself a shout out. Have you been buying today? Have you been selling? Based on the momentum indicator, shows number of retail investors have been getting in. So a lot of individuals, maybe like myself, that have been buying. I don't know. Let me know your thoughts. And starting as of today, you do see a nice deviation. So white line above the red, showing a bullish sentiment. So I said this in my video yesterday that the technicals were going to be one of the driving factors for PayPal to go up higher and potentially even touch that, I think it was the high 60s or low 70s in the short term. But aside from that though, today it did successfully transition from the lower to the higher percentile of the Bollinger Band, and it is mostly bouncing off of that 100-day moving average that did occur on Friday. So generally that does, same goes for either direction, right? Support and resistance points. So it did bounce off of that 50, kind of trend down. So it's just range bound between these points. CPI is going to be that deciding factor whether it does propel higher. If it's positive, or if it comes in a little bit harder than anticipated, then obviously it'll probably break that 100. So definitely a lot of volatility. I do believe in PayPal. I've been buying it. Not really happy with the performance as of, I guess, post their earnings, but still, I think bigger picture, definitely it's going to be a screaming buying opportunity. So let me know your thoughts on that. And like I already mentioned, I think 2 or 3 times throughout this video, CPI and data are going to be a very big factor in the market. So of course, like I said, I'm just going to play this quick video. So let me know your thoughts on that in the comments below. But without further ado, let's get right to it.
Special guest today, Peter 𝗖𝗧 from Academy Securities. He's the macro strategy, and I like going macro. Peter, welcome to Chicago, one of the few peopled exchanges at the CBOE.
It is awesome.
It is awesome. Okay, here's what we're calling today's piece. Truth or scare with respect to January data. Now moving into February, we had today's jobs report. Next week, CPI, PPI. What did you think of today's jobs report, considering jobs last month was 353,000 and boom, 167,000 in 2-month revisions?
I would put the jobs report in that scare category. I think it was very underwhelming. Not only did you see unemployment rise, you saw, even within the jobs, a lot of part-time jobs were created and a lot of full-time jobs were lost. That does not seem healthy in this environment.
You know, we had a discussion about this morning on Squawk Box, and it was brought up and accurately that when you look towards history, many times a strong economy sees increases in part-time jobs. But you've said it a little different this time.
Right. I think in the past you see the economy growing, so you hire people part-time, then you make them full-time. I think a lot of things have rolled over, and travel, for example, is rolling over a little bit. So you're turning people from full-time jobs into part-time. That is negative. It's slowing. And it's happening at a really bad time where debt's rising again, consumers are getting tapped out, and the other thing that I was really looking at this week was on the JOLTS report. They come out with the quit rate, and the quit rate was now lower than it typically was throughout 2016 to 2019. So the job data is not this great job market anymore. You can't turn around and get a job. I think we have to start factoring that in.
You know, and another area that disturbed me today, now I understand that last year,
also, on a side note, what this analyst was kind of talking on, that's kind of what's scaring the broader market, right? So especially going into CPI and just a lot of this underlying red flags that's starting to pop up, that's what's been kind of slowing the broader growth of the market.
We had a 3.4% unemployment rate, okay? Now, this year, so far, the low's been 3.5. However, to get a lower unemployment rate than 3.4, you're going back to 1953. And all of a sudden now we see 3.9% today. Basically, it jumps a 0.5% from 53 to a 2-year high. What do you make of that?
It always makes me nervous when you see that rate of change. Did people who needed that job lose their job? And if it's true that the hiring's going down, part-time jobs are all that available, what happens to spending? So I think consumer spending, which has been a big driver of this, and frankly has surprised many people, is no longer looking that good. Credit card debt is back above trend line. All these things that we talked about for 2 years post-COVID no longer exist. So I think we see rolling over. And
another thing, we've been showing charts while we're talking, and if you look at 2s and 10s together, what you'll notice is that they both dip, but now they're both coming back. 2 years actually coming back a bit stronger. Short maturities have taken the lead on being a little stubborn with regard to going down in yield. What do you think that's all about?
So one, I think people are starting to realize it's a pretty narrow window for the Fed to cut. I do not think they can cut in September or November meeting ahead of the election. It will be viewed as political, whether it is or otherwise. So I think you're starting to think maybe 1, maybe 2 cuts is all you get. And then at the long end, I think as people start campaign mode, and maybe the State of the Union last night is the start of the campaigns, people are going to get scared about the deficits again. And I think we're going to see 10s go through 450, maybe towards 5% like we did last September when all anyone focused on was the deficit.
Right. And
So you're going to hear that a lot tomorrow. So people are going to be analyzing information and then thus determining and try to predict how many rate cuts there are going to be, or potentially if there is going to be any. So definitely a lot of volatility in the short term. So take advantage of dips, my own opinion, of course, but I really do like PayPal. So I'll be starting to do a little bit more coverage on that, whether it be daily or whatever else. So let me know your thoughts. Give yourself a shout out if you've been buying, if you've been selling, and what you have been doing with PayPal. And one final thing, take advantage of this promo. Simply sign up for an account with Moo for $100 ad and you get 5 free stocks. Each stock is valued up to $2,000. So this is one of the best deals in the market. Take advantage of this while you can. Link in the description below and also the comments. With all that said, appreciate all of you watching.